Hey everyone, this is C Crypto Daily Buzz. Today is April 12th, 2026, and we're looking at how Bitcoin ETF flows, on-chain data, and a major global scam crackdown are shaping risk and volatility for investors and OFWs in Southeast Asia. This channel summarizes the most important crypto news for investors in Southeast Asia, including traders and remittance users in the Philippines, Vietnam, Indonesia, and across the region. Issue 1. BTC ETFs. Volatility. Now answers to institutional flows. Bitcoin's biggest moves are increasingly driven by ETF flows and macro expectations, not just retail trading and headlines. Recent research shows that after $6.4 billion in outflows from late 2025, March flipped to roughly $1.3 to $2.5 billion of net inflows as large desks bought weakness instead of selling into fear. Analysts point out that these ETFs now manage tens of billions in assets, meaning volatility around macro news can trigger fast, mechanically driven flows in both directions. For C investors, including OFWs who DCA through exchanges and apps, the main risk is underestimating how quickly ETF rebalancing can turn a normal dip into a sharp cascade or a V-shaped rebound. In my view, treat ETF flow data like a risk radar. When flows are choppy, it's safer to reduce leverage, widen time horizons, and accept that intraday swings are driven by big US funds moving size. Issue 2. On-chain battle zone, where traps and liquidations cluster. On-chain data suggests Bitcoin is entering a wide trap zone where both bulls and bears can get liquidated quickly. A new report estimates about 11.1 million BTC are in profit versus 8.9 million in loss, suggesting a revisit of the $60,000 region would resemble prior bear market low zones in realized profit and loss. The analysis flags $65,000 as key support and $79,000 as resistance, meaning any sudden spike can force short covering, while a sharp drop towards $60K could trigger long liquidations and panic selling. For investors in the Philippines, Vietnam, and Indonesia, this wide band is where emotional trading is most dangerous, as both buy every dip and short every bounce can get chopped up by fake squeezes. Treat this area as a high-risk corridor, use smaller position sizes, set clear invalidation levels, and avoid moving stops wider just to survive the noise, which often turns a manageable loss into a drawdown. Issue 3. Operation. Atlantic social engineering risk is systemic, not random. This global crackdown shows the biggest risk for many retail users is highly organized social engineering scams. Authorities behind Operation Atlantic report dismantling a syndicate that used fake trading apps and deep-fake identities to gain full access to victims' crypto accounts, with around $12 million recovered so far. Investigators say the group followed playbooks, slowly building emotional trust, showing fabricated profits, then pushing victims to add more funds or liquidate savings, while quietly moving assets out of control. For Southeast Asia, where communities rely on messaging apps for social and side income ideas, the risk is that these scams feel personal, making red flags much harder to recognize than typical phishing links. Adopt strict personal rules. Never share seed phrases, never install apps from private links, and never give remote access. Because once those lines are crossed, no technical security or regulator can recover losses. To summarize, BTC ETF flows amplify volatility, on-chain data shows a wide 60K-79K battle zone, and Operation Atlantic exposes organized scams targeting C users through social engineering. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please subscribe, hit the like button, and turn on the notification bell. Chart analysis and trading insights, join our free Telegram channel, link in the description. See you in the next one.